Happy Nelly.
Well, the Dow Jones Industrial Average is hovering right around a very important psychological barrier, and that is 11,000 for the first time since September 2008. Andy Serwer, what do you make of this? What does this all mean?
Right, and of course, September 2008 was the brink of the financial crisis, the meltdown, and it's pretty amazing that we're back at that point. And of course, we're miles away from the low point, March of last year, when the Dow was at 6,500. The Dow's now about 68% up from that point. The NASDAQ up almost 90% from March of last year, Lee, a double almost from that low point. And, it has everything to do with optimism and pessimism, right?
Absolutely. I mean, some people say that this is actually overinflated, that we're due for a pullback, that a lot of this is just, enthusiasm that has not yet been reflected, certainly in top-line growth for companies and in terms of a real return of demand for goods and services,
right,
both on the business side and the consumer side. So what are your thoughts on that? Is this merited or not?
Right now, I think that the market really responded. It's been a year, a little bit more than a year than that low point. And I think what really happened is that we realized that we weren't going to go down the drain. America was not going to disappear into a black hole. And so I think that was a real reason why we've had this big leg up over the past year. Now, it remains to be seen, of course, where we're going from here. As you said, profitability has not really come back, although there are signs. But, we're continuing to see more and more signs that things are continuing to improve. The government's signaling that it may look to exit from its position in Citibank. That's a real positive there, just giving signs. Talking about the day, of course, when it may be raising interest rates. That's another thing that the government has been signaling. So, there's some things out there, but, everyone's very cautious at this point, right?
Absolutely. And, the government pulling back a lot of the help it's been giving the markets over the past 18 months, it remains to be seen whether that's going to affect the markets. I mean, one of the things that's
right,
been buoying things has been this help from the government, whether it's buying the mortgage-backed securities or bolstering the banks or really the collaborative effort here. So that's a big question mark. I do think that one thing it's becoming increasingly clear is that we are not, well, let's just say the risk of a double dip is really receding, and I think that is going to continue to bolster enthusiasm going forward. So I think it might be safe to say we're out of the woods in terms of a really severe double dip. But
you don't want to jinx it, right?
That's true.
It's interesting too. I mean, you look at one company that's been on a tear lately, and that's Apple. Its stock has just been, going to the moon lately. It's now the third most valuable company in the United States. After Exxon and Microsoft, its market capitalization just passing Walmart the other day. I mean, just huge gains. So, what you have to say here is, this is a consumer company that's selling stuff to people. So if you're building better mousetraps, it really doesn't matter what the economy's doing, Lee. I mean, you can really continue to build your business. But, as far as the market goes, the only thing I know for certain is if I think it's going up, it's going down. Or, it's always doing the opposite from what I think it is, certainly.